This one. Thank you. Welcome everybody to this very, very interesting session, afternoon after lunch, I hope. But it's good that it's not too late. It's not 3 p.m. because 3 people would start sleeping. At least food is not yet digested. But allow me to also invite Robert up on stage because we want to give you I think 45 minutes, only 45 minutes. If it's past 45 minutes, because we are lawyers, we can talk a lot, including Franje, who's a lawyer in the digital space. We have the propensity to talk a lot and in big words such as those, yeah? So yes, in 45 minutes, please alert me so that we can stop at that, yeah? But let me, at this opportunity, I have invited Robert. I know most of you know him, but I think let me allow everybody to introduce themselves in like 2 minutes before we can get down to business. Yeah? And then the interaction as they introduce themselves and the space. So we could start from that far end coming here.
So hi everyone, my name is Robert, as you've heard, and I'm an advocate of the High Court of Kenya. I also serve as the chairperson of the Blockchain Technology Subcommittee at the Law Society of Kenya, Nairobi branch. I'm a co-founder at Sheria Online, which is a legal tech startup that helps people understand, blockchain technology and help with its regulation. And I'm also a founder at MyShamba Digital, which is a real estate innovation tokenizing platform. Definitely, there's some intersections in NFTs and real estate. And I think, it's a pleasure to be here. I'm not wearing my suit, because Kakai told me to come, it's a Friday, and come dressed chilled. So I'm always in a suit. This is my first event actually without a suit. So it's a pleasure to be here, and I hope we can interact and learn a lot. Thank you.
Thank you, Robert. Yeah.
Okay. First of all, I'm happy to be here. This is probably my second edition. My name is Frank. Commonly Franje. I'm a builder in the space. I'm not a lawyer by profession, but I read a lot of the stuff. So mainly I'm interested in building. So of course, I have to read the law and understand it quite well. So we built Benkiko on top of the Stellar network. So essentially we are trying to enable the digital youths to take advantage of cross-border payments, and as well as try to see how we can bring digital governance into a local day-to-day environment.
Thank you, Franje.
Hi guys, my name is Kakai. Hi guys, my name is Kakai. I'm an advocate of the High Court of Kenya. I'm a lawyer. Started out in the crypto space a few years ago, hunting airdrops and meme coins and shit coins. But yeah, here we are. So I'm the director at the Blockchain Association of Kenya, and we've been doing extensive work this year, engaging government and educating regulators on the benefits of digital assets and why we need a favorable regulatory framework for that. We've appeared before Parliament twice, first on 25th June, second on 31st October, and made a very solid argument to the extent that government allowed us, for the first time ever as an industry, to draft our own regulations. So me and Robert are working in drafting the first version of the Yeah, so apart from that, I also consulted with the European Crypto Initiative as an African correspondent. We are building a taxonomy of digital assets and regulations, and we do opinion pieces in response to different organizations. For instance, right now we are doing a piece in response to the International Organization for Securities Commission. So we're just trying to understand how digital assets are classified in different jurisdictions. So it's very interesting to represent the African space to that extent. As in full time, I also consult with Makadao, is actually the biggest DAO globally with a treasury right now of $5 billion. And a lot of those treasury investments just happen in the global north. So I am passionate about this because I'm advancing or pushing an agenda that as Africa, as Kenya, we need to tap into such kind of investment. And even the theme we are pushing, and that's the theme we use in Parliament, is that we want to bring $20 billion investment into the country in form of tokenization, in form of venture capital, in form of private equity, and create employment and entrepreneurship opportunities for Africa. Thank you.
That also deserves a clap. Thank you very much. So I think for me, my name is just Andrew Waithumbi. I don't have so many good things that I'm doing, like everybody who's on my panel. That's why I'm the moderator. And I think our conversation will start right where it has stopped with Kakai. And he's mentioned that I've been in Parliament trying to discuss tax regulations. Yeah? And broadly speaking, then they say to government and they propose with Robert that we need to set out certain regulations for our industry. And when we were speaking about digital assets, includes NFTs and all of these things. So then, what is these things that you are concerned with and that you would want to see in this policy? And also, as we speak to that, what would you want to hear from artists? What input would you want to hear from artists within those regulations? How would you want an artist to say that I can see my voice somewhere there? Yes, thank you. So maybe that would be Alan, and then you can go to you, Robert.
So first, I can tell you appearing before Parliament, the first time it was tough, because for a very long time, crypto has been associated with bad players. So when we appeared before Parliament, the first time, one of them said, "I mean not what crypto, mean wale wakora." So for those who don't understand English, is you're the scammers. And making a case for the first time was not very easy, because every time somebody hears crypto, they think of scam. So there was a lot of unlearning to do, first of all, because the moment you're appearing before someone to make a solid argument and they already have a prejudice against you, knowing that these guys are scammers, it's hard to make anything more. So we had, first of all, to make it clear that, first of all, blockchain is not about crypto. It's about unleashing a whole aspect of financial opportunities. So we strategized our pitch, and we knew government is in a cash crunch. And the only language you understand is the money language. The president, as I was telling you earlier, flew to Silicon Valley with Meg Whitman and later on to Singapore, pitching to investors and VCs that please come invest in Kenyan startups and all that. So same thing, that is the exact pitch we used. We're like, look, a lot of countries are already doing tokenization, and they're doing it quite well. Blockchain has the opportunity of unleashing or bringing $20 billion into the country. So
I hope everybody can hear that. $20 billion. Yeah,
$20 billion. So the first pitch was not what is crypto. The first pitch was, please allow us to bring $20 billion into the Kenyan economy. We'll show you how. So Robert talked about tokenization of real estate, because, for instance, affordable housing. So in the last, for Kenyans, in the last 1-2 years, the go-to solution for government revenue has always been taxing Kenyans. If they want to raise money for affordable housing, tax. They want to raise money from fuel levies, tax. So there has not been an alternative for the Kenyan government to tap into revenues. And to that extent, that is why they proposed the digital asset tax. So we are like, you're looking at this the wrong way. There's actually other ways of tapping into this. Tokenization of government treasury bonds. And we are having a conversation with Robert. Philippines has done it, and a few other jurisdictions are doing tokenization of government bonds. So how would the tokenization of government bonds look like, for instance? Government usually for those of you who have tried to buy bonds, it's hard for you just to get through the process of buying bonds. That coupled up with the fact that the Kenyan shilling is dying, it's not an ideal investment. So tokenization will essentially involve somebody just coming and giving governments $10 billion upfront, then tokenizing the bond papers and selling that as fractional ownership in the secondary market. So what does that mean for the president? It means that every financial year he's always guaranteed that Kakai will show up with $1 billion to buy the government tokens, and he'll deal with the secondary market itself. So with that being said, me and Robert, of course, are doing a policy paper. So those are the things we're covering. The policy paper is covering use cases on how government can expound on its revenue base and still empower Kenyans. Now, the bill itself is covering, first of all, taxonomy, that is classification of digital assets. What are NFTs? What are stablecoins? What are algorithmic tokens? And how do we treat them? And I was just having a chat with you. We're using case studies from countries like Europe, from continents like Europe with MiCA markets in crypto assets. We're looking at the Singapore regulations. We're looking, I think Robert will cover extensively what we're looking at. But yeah, so number one, it's taxonomy. Number one, it's a simple licensing framework. And I was having a chat with a lot of guys close to me within the startup ecosystem and some of who heavily support us in this initiative. And they just want a simple licensing framework where I know as an exchange or as an NFT listing platform, I just come and pay X amount for licensing and be able to do business in Kenya. Just to prove how passionate they are about this, when South Africa launched the licensing framework, some of them are already relocating to South Africa because investors are comfortable and it creates legitimacy and a legitimate expectation. I know that if I come to this market, I won't be unilaterally shut down. So, number one, as I've said, taxonomy. Number two, a simple licensing framework. And number three, a working regulatory sandbox that now enhances and enables innovation. So that any other thing that we've not figured out within this regulatory scope can always be innovated and looked at at the regulatory sandbox level. So I think I'll allow Robert to cover the other comparative analysis things and other jurisdictions we're looking at.
Yes, please proceed. I think from Alan, yes, we've said that there are these things that you're not approaching this conversation from saying that we need to tax. What benefit is it for the government? And not only for the government, but also for us. That's why we also need to participate in terms of policy. Yeah? Then now, Robert will be telling us, what are these comparative within Africa? What has been done for us to borrow these experiences that are good for us to use? And not only in Africa, but then in the world, yeah?
Yeah, so just to finish up on the taxation, there's the Organization of Economic Cooperation Development, the OECD, and actually came up with a framework, and included in the framework is a taxation regime. So I'd advise you guys to go check it out, the OECD Crypto Assets Regulatory Framework. And they talk about taxation of, crypto assets, digital assets, or virtual assets, whichever you prefer. And it's quite interesting because, there's proposition of capital gains tax, as well as that's for if you sell and gain. Like, so you can buy real estate and sell at a profit, and then you have to pay the taxes on the profit. So that's how I'm looking at it from a capital gains tax point of view. There's also suggestions of income tax for OTC traders. They're using that for their livelihood. So that's on taxation. Let me go to the comparative jurisdictions, right? So in Africa, let's start at home. In Africa, there are various jurisdictions which have implemented Virtual Assets Act. I'll go with virtual assets, okay? When I'm talking about virtual assets, I'm talking about crypto assets, I'm talking about NFTs and digital assets. So in there's Botswana. Botswana have come up with a regulatory framework for regulating the space. And this has actually seen, like I said, a lot of players applying for licenses and a lot of business, especially in the virtual asset world, by virtual asset service providers such as Yellow Card and other players applying for licenses because, with the regulatory framework, there's certainty. And that's what Kenya is missing out, that certainty, whereby businesses want to set up in Kenya. Kenya is known as the Silicon Valley, right? The Silicon Savannah, sorry. So a lot of businesses want to set up, but the legal uncertainty, there's a cautionary notice by the central bank making it difficult for virtual asset service providers, these are like the cryptocurrency and the players and the NFT players, to actually even just open an account, right, a bank account. And I'm sure if you run a business, you know the importance of opening a bank account. And if you don't, if you run a business, don't have a bank account, I'd advise you to open a bank account, right? Because it's really, it helps in payment of taxes and other outgoings, right, to your suppliers and whatnot, right? So that's one. So there's Botswana, which has come up with a wonderful act. It's actually going through it today. And like Kakai said, it's the interpretation section, basically the definitions. There are also the licensing regime. There's a creation of a regulatory body that will actually be issuing licensing. So there's a lot of certainty. So let's say if you're a player, a digital asset player like my co-panelist here, you can just go there, apply for a license, and start doing business, step into the Botswana market. Same situation in Mauritius. Mauritius, they have an act of parliament, as well as there's Namibia, Botswana, Mauritius, and South Africa. Although South Africa, it was implemented by the Financial Services Conduct Authority using a subsidiary legislation. It's like CMA coming up with, regulating the space, right? So basically, the Financial Services Conduct Authority gives out licenses to virtual asset service providers and regulates the entire space. And like looking at other jurisdictions, and point out to definitely Singapore. Singapore has been a leader in the digital asset space. They came up with the financial authority was it was quick into tapping into crypto assets, and this saw a lot of companies setting up and increasing the GDP, right? There's also Switzerland. Switzerland was actually one of the first countries to ever come up with a law, the DLT Act, the Digital Distributed Ledger Technologies Act. And this was way back in 2016, 2015. And you saw the benefits of that. Crypto Valley. I'm sure you guys know about the Crypto Valley from the CVC group. So, and the city of Zug. And essentially, this is a place whereby a lot of companies globally have set up. And, there are over 10 companies worth over $10 billion. There are a few companies worth, a dozen or so, worth over $1 billion, or a couple of unicorns. So you can only imagine like what this has brought to the ecosystem, the employment opportunities, the GDP of the city, billions, pumping literally billions of dollars into the economy. And now, to the use cases like Kakai was saying, America, not so much, they're bringing good jurisprudence in terms of enforcement. I'm sure you guys saw the Binance case, whereby Binance was ordered to pay, I think, $4 billion worth of fines for, allowing, basically faulting the AML CTFs and allowing, terrorist organizations such as ISIS, Al-Qaeda and others to use the platform. Nowadays, the biggest exchange. But any other story, that's a debate for another day. But and also CZ was fined, he paid a police bail of, I think, $178 million. So a lot of enforcement jurisprudence coming from there. So for me, it's like I said, the use cases, right? That's where the important thing is. One, this cross-border payment. I'm sure if you've ever received money from, another jurisdiction to Kenya, it took forever to arrive. if you're getting money from America or Singapore, Switzerland, because of the SWIFT banking system, has to go to this bank. But if you're using a blockchain network, it's instantaneous, near instantaneous settlement. Transaction costs are low. And so many benefits. So there's that cross-border settlement using, crypto assets and digital assets and virtual assets for that. Tokenization, you can tokenize literally anything. Last week I was on a call with someone who was telling me they're tokenizing water in Kenya, right? And it's crazy, and the benefits are crazy. It's like, there's Turkana, they found like a huge, as well as the oil, which we aren't sure about, there's a huge water deposit. So if you were to tokenize that water, you could bring so many benefits to the community. And I was like, this is marvelous. So there's tokenization of water. Kakai has talked about tokenization of bonds, treasury bonds. We are looking at even tokenization of startups by, ICOs, using ICOs to fundraise. There's tokenization of real estate, the artists in the house. There's tokenization of, artwork, and basically using blockchain technology to trace the artwork, so you can follow up on royalties and other payments and not miss out, right? And licensing as well. So the benefits are numerous, the use cases, this is, for example, real estate is the world's largest asset class. Treasury bonds, Kakai gave a perfect example of, I think, in the Philippines, whereby they tokenized a bond of about 100 million plus USD. So the benefits are crazy, and also it enables players like us to tap in. I'm sure all of us, most people in the room have, a Binance, let's say a digital wallet or a virtual wallet. So they can participate. Same way you have M-Pesa, you can participate, right? How many people have a CBS? The CBK launched as the CBS now, right? For investing in treasury bonds. How many of you guys have such an account? So my point is blockchain, blockchain technologies like M-Pesa, there's a lot of financial inclusion as people already have the devices. And I know like a player like Kotani Pay, they actually have USSD, you can participate in the digital asset, the crypto world, or the NFT world with the USSD system, right? It's like, the Kabambe. So yeah, the benefits are numerous, and the time is now. Thank you.
Thank you very much, Robert. I think what we are getting from both Robert and Kakai is that these government regulations are good because they are affording us certainty. Yeah? Not only as users, but also the investors. There is a bit of certainty with it. Yeah? But I would just want them to answer one question before we go to Franje. So are we essentially saying that, for instance, for the Kenyans who are here, that we should not complain about taxes and pay digital service tax? Just as a conclusion. 1 second, 2 seconds, 2 seconds each.
For me, it's a simple, answer. Pay unto Caesar what belongs to Caesar, and certainties of life are death and taxes.
Okay, thank you very much, Robert. So we have to pay, because we are, and he gave an example of capital gains tax. So if you are gaining something, then you should pay. Give unto Caesar what's due. Alan, what do you have to say to that?
Yeah, I agree with Robert. First of all, tax is certain. Number two, it creates legitimacy. So as long as it's not an oppressive tax regime, it's a favorable tax framework. And that is what we are advocating for, a favorable tax framework that will allow me as a creator to create, pay some tax, but still make enough revenue from my project. So favorable tax framework, not just any tax.
Okay, yeah, thank you. So then pay unto Caesar, and then you're told a favorable. It's not an oppressive tax framework, then it should be a framework that is very balanced. It is very equitable to everybody, not oppressive in any way. And we have heard from the two advocates, and then they are saying that, yes, we need these legal frameworks. We need regulation, and they're actually participating in putting across a framework for that. So I'm just wondering, Franje, now that in Kenya we are existing in a very interesting environment, so do you agree with the lawyers that we need these regulations for certainty? Now that we know in DAO systems, we know what DAO stands for, that's sovereignty. Trying to say that, we don't want the government to be involved in what we are doing. So what do you have to say about that? And I can see many people who have DAOs around here. So what do you have to say about that? Certainty. Speak to certainty first of all.
I think, first of all, about taxes, I have to agree. You have to feed the goose that lays whatever the egg they think it lays. But as a DAO practitioner, I'm also not for that. Though I do advocate for what they are going for, writing their own bill or writing our own bill, because it comes from now us with what we want. But I also have like a different opinion regarding regulations, because first of all, I'm into DAOs. Second is that I think we have every law that caters for cryptos to exist without creating new ones, without trying to overthink the situation and all that. So yeah, DAOs are there to just tell the government, you know what, you've had your cake and eaten it for so long, now it's our time. So part of those laws that I anyway, part of those laws that I could summarize that could give you probably a head start, and I'll make sure I'll be involved in those conversations, is that number one, if you look at the Central Bank Act, is it Cap 416 or Cap 419? It says that everyone in Kenya is allowed, if you're not using the Kenyan currency, if you two have an agreement to conclude your trade in the way you deem fit, then you should. I think that's number one, and it's very, very clear. Number two, if you go over the Cooperatives Act, is you realize that they define a way that each one of us can come together and participate in something that is government approved, as long as it doesn't hurt anyone in the end. So what am I trying to say with this? You realize that most of these things are commodities. Whether it's an NFT, per se, it's a commodity. Whether it's a token of whatever kind, it's a commodity. And for so long, the CMA, which governs now part of cooperatives and how they invest their community assets, is that the CMA specifically, and the CMA Act, allows for the creation of a self-regulating authority or a self-regulating organization. If you look at it very well, this is basically a DAO. For the most part, because the law says that a group that ventures into a commodity might align itself with the policies of the CMA, but since the CMA is not per se updated on what this group is doing, then the CMA might give permission to this group to experiment for quite a while until the CMA on its side feels like, oh, we feel this asset or these activities of this group are sort of legitimate, and that's the legitimacy Kakai is seeking for. So in essence, the CMA and the CMA Act specifically provides for the creation of a self-regulating organization that can be updating the CMA on a regular basis. These are our operations, this is how we do things, this so and so and so on, until the time where the CMA feels like, now we can onboard this whole industry into the laws of the CMA, or the CMA might need to update the CMA's Act to accommodate for what we have learned from this space, or this organization, what it has been doing. We should be very critical into looking at those laws, especially that segment, so that we don't have to bombard people with new and new regulations every time. Digital asset tax, some other tax, trying to over-define something, and so on and so on. Anyway, I'm not a lawyer. You'll advise me on that. So in terms of the advantages and the many advantages is that they are there. We should realize them, and we've talked for the longest time. 15 years is a lot of talking since Bitcoin came on board. We should, at least if we are trying to talk with the government, let's unajua MP ukimwambia crypto can do this, crypto can do this. It's not the same like saying him, these are practical projects. We have 100 users. We feel like if these laws aligned with this in this way, because this thing of telling them, you know NFTs, you know Bitcoin, you see, MP anashindwa, anataka kumaliza hiyo session and akalala huko. So me, I believe we know the practicality of it. That's why this community is so big in this space. So we should, to some extent, have like real practical solutions that interrogate the existing laws, because there is that permission in between the laws without needing to create newer laws. Well, also in that, I've seen great people doing great things regarding ICOs, monetizing and earning from NFTs. Maybe they will pay, maybe they won't pay. Me, I'm for not paying.
Thank you very much, Franje, for that. I think what I'm getting from Franje, I think everybody also is agreeing with me, is that to some extent he's agreeing that we need, that regulation is good. But for him, what he's doing is being innovative with the current laws that are there, trying to interpret it in his own perspective and say that these laws for sure are good and they are there for legitimacy. And also what also Alan and Paul was saying that that there is that aspect of saying that these regulations, there is an aspect of legitimacy and certainty. Yeah? So, but I know you'd want to have a comment, each of you, for that, and then I would allow the audience, because I know there are many questions, like 5 minutes of questions, but let me allow them to maybe respond. Let me allow Alan.
Yeah, so number one, with regard to the current laws, and I think that is part of something me and Robert were examining, because in our policy report we have a whole section analyzing the current existing framework. And so number one, the reason why we're going into a new law is taxonomy. So in as much as the existing laws, there's a lot of conversation around, are these commodities, are these securities, or all that. So number one, it's taxonomy. Number two,
maybe you can clarify.
Taxonomy means classification, knowing that this is an NFT. Are we going to classify it as a security or a digital asset? So yeah, so understanding it from a classification perspective. Number two, which is the biggest challenge of the current laws and how they are structured, and I think that is why we need an overhaul and we need the new regime. For instance, the ICT Act, the Kenyan ICT Act, is a 1997 act. It was meant to regulate Voice of Kenya and all those radio stations and that old kind of technology. And yeah, it has gotten us to where we are. I mean, we have over 100 TV stations and all that. But over time, all these regulations that we're referring to, current regulations, have carried a lot of bureaucracy, a lot of gatekeeping, and a lot of a lot of bureaucracy that you want to do away with. So just rushing to adopt current laws as a policymaker is like, for instance, going to date someone and taking over all their trauma and all their heart and also and bringing them on board. And for some extent, it's a good thing, but sometimes innovating and bringing fresh ideas into the space makes things easier. I mean, have you, for instance, we talk with a lot of regulators every day, and just convincing somebody at a mid-level manager at CMA, CBK, all these regulations, to look at these things from a different perspective is hard. So as much as me and Robert can go and pass a bill in Parliament or do an amendment to existing law that will adopt these technologies, there are people who implement these technologies. And as long as that mid-level officer at KRA or a mid-level officer at CMA and CBK still has some certain kind of perspective, it's hard. That is why I appreciate what they did with the Data Protection Act. Of course, originally, data protection would have fallen under Communication Authority or something. But government was like, look, for us to be progressive, we have to set a whole new office for this. They passed the Data Protection Act. They now created the office of the ODPC. If this was done within the old regime, there would have been a lot of bottlenecks. Adopting, we are going to propose amendments to existing legislation, but we want a new office whose mandate is to push for innovation. This new office whose KPI is to make sure that the digital asset community benefits. So if we push these to existing offices, it will be hard. There's a lot of trauma there. We want fresh minds whose objective is, we are heading this side. We're going to empower the Kenyan community through digital assets. This is your KPI. So that is why we're pushing for the new office, but that will still have, of course, proposed amendments to existing laws. In terms of use cases, the way Franje is saying, part of the policy report actually, and that is why we showed up to Parliament with Binance, with Kotani Pay, with Moka, because you're not just speaking from a theoretical perspective, but saying, look, I'm an entrepreneur, I've raised $2 million, I've been doing business in this space, and if you allow me, I would open up this space to more opportunities. And the policy report will have very express and very specific use cases. So, yeah.
Thank you very much. I think at this point now, I may allow 2 or 3 questions from the audience. I know there are many questions, but as we say, what essentially we're saying is that also from what we're getting from Alan, is that we want to avoid a situation of where $500 in 2009 was allowed to, KRA said that you can't come into the country with something that is worth $500. And they were saying as a justification, it is an old regulation, and we agree we need to amend. So that is what Kakai and all of us are saying, that we have laws, but we need to amend them. So 2 or 3 questions. I think I can start. I think I've only been limited to 2 questions, so we'll start with one at the back and then come with someone will assist us.
Hello. Hi.
And it's just to comment, sorry, not that I have focused on you, a question, do not comment. A question, I've only asked for questions because I have a timekeeper who's always on my neck. I don't know whether you've seen her walking around here, yeah, but we can only, if it's a comment, 1 second, and then a question. Sorry to interrupt you.
My NFT collection is 10,000 NFTs, which are a method of crowdfunding for my animated series. And I have done crowdfunding before. We did some crowdfunding, we raised 200 and something thousand bob, and my accountant dealt with it as that crowdfunding. I'm not convinced that because I'm raising the funds with NFTs, it needs any different structure. What's wrong with the structures that are there? I'm not quite seeing, in terms of pure financials, I'm not seeing the difference between an NFT and a tomato. Why do you need different taxes?
Thank you very much. Thank you for that question. And I think all of us, I think it is I don't know whether I should take the question first and then let us. But let us first of all address that before we go to the next question. Okay, we can start.
So back to what Kakai was saying in terms of classification. So as part of the act, you have to define what an NFT is, what an unfungible token is, and so it's definitely a virtual asset. I think that's the first difference in the tomato. And so if you're looking at it like from that point of view, I feel your pain, and like I think that goes to the example of the ICO idea of initial coin offering. It's a spin-off of an IPO but happening on chain, right? Whereby you can issue shares or something, a part ownership, and allow people to invest in it. So I'm assuming that's what you're doing with the NFTs. So more or less, if you're using the NFTs to, how people, are they investing in the NFTs to give you money or? Yeah, so for me, I'm looking at it to be on the various use cases of, what NFTs can be used for. Like I said, that's one use case as a reward, like you're saying, like a token that can be used, like a utility token or a token of some sort. I'm saying you're doing utility tokens, but I'm looking at that as a use case. And there are many other use cases, like I was giving earlier, in terms of, using it, NFTs for licensing, tracing. So you can use, let's say you do a song, a hit song, you could put it on chain as an NFT, allow people to invest in it, use it for licensing to big corporations and track the royalty payments. So it's about the use case, right? And like Kakai was saying, so that will be on the various, in the act that will have all your input in making the use cases and what would apply in such instances, right? Because also, like, there are various types of tokens. There are security tokens, utility tokens, and their functionality is different, right? So also, if that's actually part of while we're meeting the departmental parliamentary committee on national finance and planning, that's part of the things you're saying. You can't impose a 3% tax, blanket tax, on all digital asset transactions. There are various transactions, right? You can't, for example, let's say I'm giving him utility tokens for a platform, I'm giving him like Bitcoin, and I'm giving him tokenized assets. Those are three different things. And how do you know it's back to the functionality and the use case? So the use case will determine the relevant government action applicable to it. Thank you.
So let me allow, thank you very much, Robert. So let me allow Alan, and then we can go to the other question.
I think when I talk about regulation, we have to understand the objective of the two pillars of regulation. And the one key pillar is usually consumer protection. You are a genuine person who is genuinely doing genuine business, but there are people who've done NFTs, then they've done rug pulls on people. So how do you ensure that consumers, or the retail consumers who are participating in such kind of products, are protected? So the biggest pillar of regulation is usually consumer protection. We have genuine players in the room, but we have a few bad eggs that can ruin the game for everyone. And that is what makes Parliament, the moment we went to Parliament, they look at the negative, they think we are scammers. So a clear regulatory framework that would essentially protect consumers, because a lot of regulations, all securities and regulation and financial regulations are usually pegged on consumer protection. So for instance, if your NFT was a reward, to some extent, if the value, I don't know the use case of that, but I will give an example where somebody else is selling an NFT as an investment. Then they do a rug pull and people lose millions of dollars from it. So those are the kind of use cases that government is concerned about. And we as a community have to demonstrate to them what is the criteria for identifying a fraudulent deal and a genuine transaction. I think that also answers the question.
Thank you very much. I hope that really addresses that question. So let's go to the other question.
Final question, please.
Thank you. Hello, everyone. My name is Manjahi. And my question is actually stemming from what you've just mentioned, genuine transactions. So, sorry, as an NFT artist or someone in the crypto space, so you sold something, you have money in ETH or in Bitcoin. You want that money to exit. So when you go, for me the process is from the wallet to the exchange to my M-Pesa. There's a risk when you're going from your Binance to your M-Pesa. And the risk is the person who you're trading with, you don't know how genuine they are. And I was listening to somebody actually yesterday, and they were talking about how even if it's a verified person, a verified merchant, they could be dealing in whatever. And people have had their bank accounts closed, or you've seen people being targeted. So if the police come to you and say, wait, you just received 100K from so-and-so, it's my money, but I transacted with someone who verified or unverified, I don't know. So how am I protected illegally in the current framework and in the bill that you're creating, such that I'm able to make my case wait. Me, I'm an artist. I'm just a guy who made money on the blockchain. I'm just getting my money out so I go pay my rent, I might go buy a car or something. And to have my account returned to me to secure my money, I think you get the question.
Thank you very much. Yeah? So I think the first part I can allow Franje to answer in terms of the operations. Yeah? Because then if there is that transaction from that marketplace to M-Pesa, because you have Benkiko, so how this micropayment system, how do you ensure that those issues do not arise? And then now into the policy questions that will allow the advocates to do that. Yeah?
Okay, let me give an example. I don't know if this is common, but I recently made a tweet about it. Those of you who have watched Tulsa King, and those of you who watched Top Boy, did you ever notice that that scene where, on Top Boy especially, where this kid was, okay, they were doing a drug deal, and essentially for the drug deals to move from the origin to the capital, London, they had to pay some guys for protection over the sea. So essentially this is what governments do. And what they do is that they tell you, we are offering you protection from something unknown. So you pay us every regularly so that we keep you protected. Anyway, so in that situation, for the most part, in P2P transactions, there is no much recourse, especially legally wise, I think, because P2P is person to person, and then without this regulation that this government are talking about, the government is not aware that Binance, even if they are aware, they are not aware that they should protect you. So in that case, when you lose, sometimes if you find a good cop, mfanye mambo yenyu, he might trace back because there is an M-Pesa number, whatnot. That's to the farthest extent. Other times you just let it slide. Other times Binance has Binance Appeal and so on. So that's on the side of P2P. Now, as things are becoming more known and more legitimate, Binance might have a direct, because the reason P2P exists is because Binance cannot integrate with M-Pesa, because M-Pesa is in the laws of Kenya and then Binance is in other things. So there is no that direct integration that when one thing fails, you can tell Safaricom, my do haikufika, ama Binance, and so on. So when things are becoming more legitimate, I think interoperability will be there, where there is probably a zero chance of you losing your money when exiting. And then now taxes will come because the government is protecting you at that time. But for now, I don't think there is a way, if you lose money at that point. The cases have been there in the news and the magazines, I mean the newspapers, but mostly to Nicaragua to kusaidia kutrack huyo mse.
Thank you. Yeah. So I think as a parting shot, maybe you can speak something into it, Robert and Alan, as a parting shot, and then we can hear from Franje. Something to that question, and then a parting shot for us.
So like I mentioned earlier, the CBK did a cautionary notice to banks and other financial institutions when dealing with crypto assets, digital assets, and virtual assets. So definitely you'll keep on facing problems and challenges with that. And that's why, we're inviting you guys to come out and help with the drafting of this bill. a national policy. Because those are some of the issues we want to reflect, the challenges that traders, young entrepreneurs such as yourself are facing, right? For me, in terms of P2P, I'd advise get an advocate or a lawyer to draft, have a template, and in the template you're doing your own KYC of some sort, getting the person's information, especially if it's a Kenyan, because even that would help. Because once you get that information, then the next step, as he's saying, it will be to escalate to the police and file a OB, and that would be relevant information while transacting. And there are lawyers here. So until then, until when banks can be allowed to deal with digital assets, which is hopefully sooner than later, hopefully that will change.
Thank you, Robert. I think we can now allow Alan to say something.
Yeah, so an answer to that question, I know the incident he's referring to. I think earlier this year, local bank had shut down several accounts because one of the biggest P2P traders apparently was involved in money laundering, and of course they were buying crypto from various transactions. So a client of mine was actually affected by that, where we have somebody who has a pool of 10 million, 20 million Kenyan shillings from wherever, then he's sending you 100K every day to purchase your Bitcoin. So P2P occurs, of course, from a bank to your bank or from M-Pesa to M-Pesa. So when they go and track, this money came from wherever it came from. But now when they're tracking these funds, my client was receiving about 100K a day from this fraudulent guy. So he was flagged as part of the transaction. So we had to make a whole argument. So there was a freezing of the accounts, all accounts involved, and we were summoned at the Assets Recovery Agency to make an argument. And the best strategy we used there was to come clean. And because there's this obsession around that time was that when you disclose that you're dealing in crypto, you might be arrested. I told the client, look, crypto is not illegal. It's just unregulated. Let's just come clean and disclose everything. So the strategy was we did, of course, a joint application to that freezing of accounts. We demonstrated that there's a platform called X Exchange, called Binance, and this platform KYCs and verifies users it's on board. So number one, the person my client was selling this Bitcoin to was already KYC'd by this platform. So if anything, if you want to verify, my client just met him on a marketplace. This is an open market where you met. So if anything, do let a court order or an executive order to the platform. They will produce all the KYC details and all that. So we got orders to verify that. Number two, my client was in this open marketplace, met this guy, and trusted that this platform has already verified this guy. And based on that trust, sold Bitcoin to this guy. So if anything, my client is just an innocent purchaser or an innocent trader. We call bona fide purchaser for sale, of course, that's the argument. So they were not involved in all this. This is just a bona fide person in a clean marketplace and all that. And that extent led to the order or the ban being lifted. But of course, there was extensive education at the Assets Recovery Agency on what exactly Bitcoin is, how do people make margins from Bitcoin, and all that. But it was an intense 1-2 week sprint of meetings every day, but eventually we got that ban lifted. I don't know, the guy who mentioned it sounds like some other people did not get that ban lifted. I think they can see me after this and we'll just repeat that whole process again.
Thank you very, very much. I think we have had a very good panel discussion on this topic, and I know we can continue further and further because I can see there are many questions. But in the interest of time, I will allow us to end there. But for me, what I have gotten from Franje, from Robert, and from Alan, is that government regulations are important for 3 reasons. One, which all of them agreed, is for certainty as practitioners, for legitimacy, for consumer protection. And thirdly, is that there is a lot of money out there, and the government is in need of money. And the only way that it can get money is for allowing us to trade, for allowing us to do this, and in return for that, we pay taxes. So thank you very much for listening to us. Thank you very much.
Thank you, Andrew and the panel. You still want to continue?